Hello, everyone. Welcome to this week's episode of Commission Breath. Brandon Love here with Tom Moffat. And today we are going to go over the three traits we see in high producers, not just in the mortgage industry, but across all industries. And we have the benefit of using this platform to talk to a lot of different top producers, get direct feedback from them on what's working with their business. So we've pulled some of these things out from those conversations, and we're just going to go deep on it today.
Yeah, and like not even just commission breath. With our old podcast, The Invested Entrepreneur, we interviewed some pretty cool entrepreneurs and business owners. And these three things we're going to talk about, they've all been encompassed by a lot of the people we've spoken to and interacted with. And all three are specific to the mortgage industry, but they have some carryover in other businesses too. So why don't we start off with the first one, running a simple business? And some of these are already going to suspect, like you've probably already heard this before, but it's true. Like running a simple business scales because if you focus on one or two things instead of encompassing like all of these different aspects in your business and go deep on that, then you're going to have a far better return versus spreading yourself thin.
Yeah, a thing I see a lot of with people, and we've been guilty of this too, is you see a new idea and you pursue it, but you pursue it at the detriment of the idea that was actually working for you. And I find a lot of people, us included, get to like 75% completion on a project, and that other 25% is still lingering, and you've moved on to the next thing. So you have all of these like B level ideas instead of getting an A in one category, checking that box, making sure it's set up in your system, and then moving on to the next idea.
Yeah, or you just get nothing done. Like I remember I mentioned to you, like I think it was 2 weeks ago, I am now just focusing on doing one thing for the day, the week, however long it would take me to do that task, that project. I'm just doing that one thing and then I'm going to move on to the next thing instead of doing two or three things at the same time and getting to maybe 50%. And a lot of times we abandon it because we get caught up in files or something else in our business. And to give an example of that, the one thing I was focusing on was after Mudrick's episode, I was like, I'm going to build out a pretty sick drip campaign that's going to start after a discovery call. And it's going to be an automated sequence of emails with different asks and different educational emails and videos in there. And it's going to keep the client warm. So that was the main objective with it. And it was an 11 series email. I banged it out in 5 days. Originally, I was like, you know what? I'm going to give myself 2 weeks to do this. And I listened to a Hormozy episode. He's like, why are you giving yourself so much time to complete tasks? Like, try shortening it and don't give yourself so much time. I'm like, okay, I'm going to try this. And I cut the time in half. And that's kind of my focus going forward now is just picking one thing at a time, focusing on that. Don't move on to the next project until that one's done.
Yeah, I love that. We noticed success with that when it came to like booking realtor appointments. Initially, both of us had kind of spread them out and we were doing like maybe 3 to 5 a week. I don't remember exactly. And then we're like, fuck this. Let's just bang out like 3 to 5 a day. And it dramatically impacted our business that way. And that's an idea of a very simple thing. Just like find your referral partners that are going to feed your business, meet with as many as possible, get the high quality relationships and nurture them. It's a very simple strategy. You can do it with your phone and email. You don't need any fancy system. But the important thing is that you actually do it to completion.
Yeah. And so let's give an example of picking one thing and going all in. So you can look at different aspects in your business, different categories. So there's lead gen, client journey.
Fulfillment, those are kind of the big
Those
ones,
are the
you
big
know?
brackets. So yeah, I mean, let's just focus on lead gen. So you have these different avenues to go toward and just picking one facet and going all in on that. So for us, it was realtors. For someone listening, it could be FAs, it could be online leads, it could be different categories. I think the most important thing that we've seen from other people that are successful in this business is just picking one, going deep with that, and going all in. I think people give up on something too soon and then go on to the next thing way before they've exhausted the one avenue.
Yeah, there's this great story, and it's about like a diamond miner, and he keeps like digging the hole, and he stops always just before he's going to hit the diamond, and then goes and digs another one. So he's doing all the work, but he's never getting the fruits of his labor. And I think that that's something that a lot of us experience, where we do a couple realtor meetings, we meet with a couple FAs, we reach out to a few lawyers, we send one email campaign, but we never stick on the path long enough to actually hit pay dirt.
Yeah, absolutely. That's a great example there.
In that theme of keeping things simple and not chasing every shiny object, the other thing we notice with a lot of these people is that they keep very simple systems on the back end. So, not a lot of fancy CRMs, not a lot of automation. They're just simple spreadsheet systems. And this is from mortgage brokers to like high performance coaches have these little spreadsheets that it's very quick for them to just look at it or have their team review it and run off of it. And they don't have to have all of this clunky software systems that try to fit into the way they want to run their business.
Yeah, like there was one CRM that I was so excited about using and implementing in my business. This was maybe like 3 years ago, and I spent money and time trying to get this beast of a system set up. So I hired someone, a contractor, to actually set up the automations. I got about 3 quarters of the way. I'm like, this is crazy if I ever had to edit or tweak any of these automations. So I stopped. I spent money, spent a lot of my time, which is way worse than the amount of money I spent on it. And at the end of the day, I've tried so many and I've always come back to the spreadsheet. And my thing is with the spreadsheet, you can still do automations from there, but the biggest thing for me is you can tweak it as often as many times as you need to. It's super simple to tweak versus any other CRM. You can't play with it and make it to what you want in your business and tweak it the way you need to. They're going to be set in their ways. And if you want something that's more flexible and customizable, you're going down a deep rabbit hole. So I highly recommend keep it simple. You can go with a spreadsheet, like look at someone like Jim Tour Lucas. He's got, I think, up to 300, 400 mil now, whatever he does, and he runs off a spreadsheet.
Yeah, it's so true. And like I love the spreadsheet just for I can pull it up on my phone, I can pull it up on my computer anywhere I want. If I want to add a column for additional data point, it's super simple versus like when I was playing around in the CRM, I'm like I can't even find the things I want. And if I want to change anything, it disrupts the whole flow of the rest of the system. So we're big advocates for just keeping it simple with the spreadsheet. And we've noticed this is a common theme with a lot of top producers.
All right, so moving on to number two, pick a niche. And this is something we're still kind of working on, and it's always at the back of our mind. And I think hindsight, like if we're looking at our history of working with clients, we do kind of niche into the clients we want to work with, but we haven't necessarily like picked a formal niche like BFS or doctors. We haven't actually done that, but I'd like to think that we know which avatar we like to work with based off of the discovery call, and we have a pretty strict no-go list.
Yeah, I think it's important to kind of pick the things you don't want to work on. And obviously, some files you get started and you're deep in it, and something pops up and you're kind of mired in crap with stuff you don't really work with all the time. And you do run into scenarios where you have to help the client through that and deal with that situation. But if you come across a file like in the discovery call where you're like, this is not a good fit for me, it's best to just move on from that and focus on getting the next three clients that are a good fit for you. And I saw a really good example of this. Actually, I think it was from the Mudrick call as well, where he changed the wording of his discovery call to being a client fit call. And in that call, he establishes number one, if the client's a good fit for him, like if they're going to work well with his systems. And then number two, if they're a good fit from an avatar perspective. So if they're a B client, he has someone to refer it on to. If they're a AAA client that fits his system, they're welcome to go on to the application process. So it's really weeding things out and makes the system great that way.
Yeah, and just to clarify, he's not actually having that as client-facing name, right? Client fit call. He still calls it a discovery call, but internally he calls it a client fit call.
I think to the client, it's called like a fit call or something like that.
Okay.
I don't know the exact verbiage, but essentially you're saying like the purpose of this call is to see if we're a good fit for each other.
Yeah, I like that. That's
That
cool.
I'm great at dealing with, and I have other things I don't excel at dealing with, and I'll establish on this call where you fit.
Yeah, and I think that's a good place to start is starting with your no-go list. And what we mean by no-go list is just literally write down whoever you do not want to work with and who isn't your avatar client. And I think like it's important to start out relatively broad on this and not really narrow it down, especially in this market where leads are harder to come by. We're getting files taken from banks, right? So it's harder to close mortgages today versus say back in 2020, 2021. So I do think broadening it to start with is important. And then as you go, as you get more experience, as you close more files, then you can start narrowing it down and tweak it along the way. So that would be no go list. The second thing I want to touch on with the niche is you can literally go like as deep as you want with niches. Like you can go, okay, I want to work with someone that has a family household income of 250K a year, credit scores 800 above, and they want to buy a single family home. Like that's obviously an extreme, but you can go as deep as you want, or you can go as broad as you want and not really pigeonhole yourself to a certain niche. Maybe you just say, I just want to work with BFS clients.
Yeah, and I think a key piece in determining that is figure out who you like to work with. So think over your last 100 files, or if you're new, your last 10, whatever. your repertoire of clients are and think, okay, how did this file go? And literally sit there with the list. Like I sit there with the spreadsheet and go, what kind of file was this? What was the experience like? What is my client experience like? Because if you find the ones you actually enjoy working with, your client experience by default does get better because you're happier working with them, you're more engaged in the file. And so that leads to more reviews, and ultimately birds of a feather do flock together. So if you're working with a lot of like low income, bad credit kind of people, that's what their friends and family are going to be like. Whereas if you're working with high net worth or AAA clients, they likely have similar networks. So if you give them a fantastic client experience, that's where your referrals are going to start to come from as well. Yeah, so just a couple of different niche examples you could focus on. Your self-employed, BFS, blue collar, white collar, what kind of programs you have for them. Real estate investors, doctors, commission earners, a lot of them get overlooked because people don't know how to work like net income programs, things like that. Government workers, first responders, Tom, you've had some success with your background in firefighting. Anything like that where you can really dial in your marketing to speak directly to them is going to be super helpful.
Yeah, if you have the background, for sure, go deep on that. Like, because you can speak to how they are as an individual or person. And if not, then maybe try to do it strategically. Like, I think like picking your niche can be either a personal preference, it can be past experience preference, or it can be a strategic preference based off of where you want to take your business. And an example of that would be right now, A files, you're going to have the most competition with the bank. And really, you have two options or three. First, you can dial in your process more. So you give more value adds to your clients, which makes you stickier. B, you can just get more leads. So you close the same amount of files, if not more, but you got to funnel more leads in to stay and keep a healthy business. Or three, you pivot into a niche that you don't have competition with the banks right now, like B business, like BFS or credit impaired. Those would be two niches that you can start focusing on now. And I think that would be pretty wise. I don't know. I don't have a crystal ball. Maybe you think differently, Brandon, but I think these low rates from banks and the aggressiveness, a lot of people are saying they're going to be here temporarily and that they're going to exhaust themselves eventually. But I kind of see it being here for the long term. Maybe not as aggressive as they are now, but I don't think we're going to go super close to rates as where we were, say, a year ago.
Yeah, the thing I find with like the AAA business is yes, you do lose more of it to someone going into RBC, for example, and having them stolen from you. But they also require a lot less time on the upfront for underwriting and things of that nature. Whereas the B clients are a little bit trickier with the time investment. And then also sometimes they're disorganized depending on what their profile is. Like if they have really bad credit, a lot of the time they don't have all the statements and things like that. So you're constantly chasing things down and investing more into it. So I kind of take it as like the A client, sure, I'm going to lose more of it, but it's less time for me. So it's less of a loss versus the B clients. A lot of it is just like frustrating work. So I focus my avatar more on the A clients, and then I help the B clients if they're from my network referral of A clients. But beyond that, I'm looking to pass them on to someone who excels with that kind of work.
Yeah, if the A file ventures into B space, then obviously we continue with that. And I think each niche has pros and cons to it. No niche is perfect. And if you're going the route of sticking in the A business, like you mentioned, Brandon, if you're spending too much time per file, then you're doing something wrong. Like if it's a AAA client, you should be able to underwrite that pretty quick. And I think dialing in your pre-approval process where you're doing, it sounds bad, the least amount of work up front for the pre-approval. And then once they get an accepted deal, say it's a purchase, that's when you do more of the strategic calls and hop on a strategy call and put more time into it.
Exactly. Really pour the gas on once it's going to amount to something. I see so many people wasting time on clients that are never going anywhere. It's hard because then they feel like, oh, I lost this file to RBC. It's like, no, you never really had the file. The client was using you as a backup option and just shopping you hard. Whereas if you treat it as, okay, once this client's committed, I'm going to blow their socks off. That's where you're going to win these ones.
And you're still going to have the opportunity to blow their socks off in the pre-approval process because you're still doing the budgeting, the videos, still getting them lender options. And I mean, I don't do the lender options until strategy now, but you still have the opportunity to do that. And if you add in things like a drip campaign where you're educating them along the way and you're not even doing it on the back end, that's the one automation I would recommend actually is a drip campaign. Then you're still going to wow them. You're still going to have a good experience for them. So it's not saying that, hey, give them a shit experience up until a live deal. Just don't spend too much time. Like you should be in and out of a pre-approval in an hour or less, in my opinion, all in.
Totally agree with you there. And don't count your chickens before they hatch. Like, it's just a
Yeah.
side note there. Like, don't count your volumes or plan off of things closing because
Yeah.
things change so frequently right now. And that's something you shouldn't be doing anyways. But I think there was a time where everything that was committed ended up closing, and we're not in that space right now.
Yeah.
Moving on, point number three is that the top producers are consistent. I attribute this to eating oatmeal every day. They do the boring work over and over again, but the boring work is what feeds the business.
Yeah, it's doing the boring work, like you said, the oatmeal. And a good way of setting that up and staying on track with that is setting up your non-negotiables. So we've chatted about this before. Like set up your non-negotiables to the lead gen activity that you want to go deep on. So let's just say, for example, we are targeting realtors. What are you doing to get realtor partnerships and to get on a call with them? Are you calling them right away? Are you sending DMs? Are you sending emails, texts? Like, what are you doing to get these meetings? And then you can put an actual number to it. So start off light. Let's say it's 5 calls a day. Start off there, and then you can ramp it up as you get accustomed to it and as you build that habit. Don't start off too strong. Don't start off too small. There's a fine art to it. And I think once you have up the non negotiables, maybe even set up an accountability partner like you and I have done over the years where you add in that element of competition as well.
Yeah, for sure. I think that's a huge way to gamify it and make sure you stay on top of it is building in that competition level because the consistency will beat out intensity all day. You will never have those sprint periods beat someone who's consistently working on the same thing every single day, just doing it over and over again because it's like muscle memory. It's like working out. You just get dialed in that way versus the person who's like, I have to do 20 realtor calls today. Chances are they don't even end up getting three because they're not in the habit of doing it. So
Yeah.
consistency will always be intensity. Find that partner, create that competition. I know that's something that we're building out in Tango, Ontario, so that we have those little accountability groups and that competition piece coming in so that people can kind of compete inter brokerage. I find it's a great way to just kind of pace yourself with other people. And I find it's fun. Not everyone has to engage in it if they don't want to. Some people are more like reserved that way, but I find that element of competition adds a lot of fun to the job.
Yeah, and speaking of competition, like I sometimes do this in my head. I visualize like what would be like my worst fear of like let's say I'm going head to head with the broker and we're trying to just build the biggest fucking business ever. What would be like that one thing that that broker is doing that I would be terrified of? And maybe it's he's dialing 100 calls a day to realtors booking meetings. I'm just using that same example. Like I know if someone did that and that was my competition, I would be scared shitless because they're gonna fucking rack in business and they're gonna do well. That's what I always kind of think in my head. Like, what would my competition be doing right now that I'm not doing?
Exactly. And I think we had that before we merged businesses where like you would do something and I'd be like, oh, fuck, Tom's going to get ahead of me. So I would do it. I would do something. You would do it. And then now we're like working on the same destination obviously, but it's good to have like elements of competition. Like we see things in interviews we do with people and we're like, hey, that's something that we actually need to ramp up or we need to
Yeah.
improve this part of the business, still keeping in the framework of keeping it very simple, sticking to our niche where we can, but then adding elements like, for example, that drip campaign, you built that out. That's fantastic, and it adds a layer to our business so that someone's not cleaning a plate on that strategy elsewhere. Different things too, just like observing what other banks or like MMSs are doing. If you see something they're doing that's really cool and you're like, just steal the idea. Like I just listened to
Yeah.
this podcast about Sam Walton, the founder of Walmart. And what he did is he built a very simple business. And then he just went around and he copied everything else from other businesses he liked and no shame about it, just applied it to his business. So he kept the simple framework and he just added layer and layer on of different marketing strategies, different tips and tricks that he pulled and imitated from other businesses he admired.
That's cool. I like that. Random thought came in my head. I actually want to talk about this real brief. It has nothing to do with the topic we're talking about, but I'm curious. I was thinking about this yesterday. Like, let's say a client journey, started the process. We just had your discovery call. You start the drip campaign, and it's the first email that comes in to the client. When it comes to having a dialed in offer, I think it's important today to have an actual offer that's different from the bank, other mortgage brokers, and really letting the client know what that is instead of just saying, hey, I have rate insurance. Like, why don't you explain what it is? So I was thinking, like, what if you compile your top 3 to 5 value adds and you can have like a 1 page offer similar to like what we're doing with Tango Ontario, but it's for the mortgage facing side. And in that 1 page offer, you have the value adds and you have an overview of what they are. Do you think that would be pretty cool for a client to see? Or do you think that's like too far and kind of like useless?
No, I think it could be cool to see. I think also it could be an interesting one page landing page where it's like, hey, we're going to show you how we're different. Enter your email here. And then that's the first thing they receive. And then from there, it's a filter to the discovery call.
Yeah, that would be cool too. And I think in an ideal world, if you're sticking in the AAA side with A clients and you're still competing with the banks and you're having a tough time right now, the ideal scenario is you tell your client up front, say, hey, I'm not going to be the lowest interest rate, but here's why you should stick with me. And at the end of the day, if you lay out your cards as to what you can offer and they want to still continue with you, that's going to be a sticky client. I think like that would be the ideal world if you can build something like that out.
Yeah, I wouldn't say you're not going to be the lowest. I would say we may not be the lowest.
I know, but in an ideal world, if you can just say, "I'm not gonna be the lowest," like, I'm telling you right now, and they're cool with
Yeah.
that, then that means you have a strong offer.
Yeah, I also like when it comes to rate, I like to just poke holes into, okay, it's not going to be the lowest as X site, but that has a prepayment problem, that has an issue with portability, that has no online portal, whatever, like poke holes kind of in those lending offerings. So the client's already thinking, okay, like, well, what do I value that at? And everyone has a dollar amount in their mind. Like for someone like me, I like having the online portal. I would pay $10 a month for that.
Yeah, we were just chatting about that.
Yeah, so people have different values in their mind. So when it comes to, okay, well, this rate equates to be $45 cheaper per month, but I don't get the 20% prepayment. I don't get the portal. I don't get the portability. I don't get the fully featured mortgage. Is that worth $45 a month to you? And then a lot of clients think, yeah, you know what, that is. And you reframe the conversation that way.
Yeah, you put it into a dollar figure if it's not too much. Sometimes it could be a pretty big spread. You look for their pain point. That's what I always try to do up front is look for whatever their pain point or their main desire is, and then you can frame around that and show them what you can offer them.
100%. So a bit of deviation there at the end, but the key thing to do when you hear things that other top producers are doing is not just listen to the idea and be like, oh yeah, that's a good idea. It's actually apply it to your business. Like if you go through and you say, okay, what's three things I can remove from my business that are making it complicated? What can I go deep on to simplify it? What's a way that I can refine my niche a bit? And how can I add more consistency into my business? If you do those steps, you're going to have a way better business. You're going to be much happier. You're going to have more time for friends and family and other activities. And ultimately, you'll build something more sustainable that you can actually continue to work on for the years to come rather than burning out right away.
Build out your model, take 30 minutes, write down one thing from each thing we talked about today, dial it in, write out your non negotiables, don't deviate from it, and you'll have a good business.
100%.